Cattle markets climbing following that latest inventory report. Michelle Rook is in Orlando at the Cattle Industry Convention. She joins us with the latest on Thursday's trade.
Joining us with market analysis, Kevin Good with CattleFax. And of course, Kevin, you guys released your projections for prices for 2024 here at the CattleCon 24. Talk about where you see prices headed.
Well, as we go to this year, we're pretty optimistic actually with tighter supplies. We reduced the herd last year 2% again. So which means as we go through this year, supply going to be favorable. Beef production, we've got that down about 4% this year compared to last. We'll have a little bit of a headwinds as far as exports, probably down a skosh. Demand domestically is still strong, but we're kind of pushing up towards the top end of the price range there. So what we've got in store is we think Fed prices will average about 184 this year, substantially higher than last. We've got yearling prices about 240 to 250, and we've got a calf value that'll be close to $3 when the year's all said and done. So pretty optimistic, but obviously, Mother Nature's a headwind as far as we've got some drought areas that we need to clean up as far as get some expansion again. But right now, prices look good.
So how long of a tail does this cycle have? When you look at a 73-year low in the cattle herd, that bodes well for the future, doesn't it?
Absolutely does. As we think about it, we really haven't stopped liquidating yet. So until you do that, you still have to say that we've got at least 2, if not 3 years of tighter supplies in front of us. And with continued strong demand, that means prices should continue to trend higher for another 2 to 3 years.
Yeah. At what point do you think producers will start to rebuild the herd?
Prices are there today, but we've got to have better feed supplies. So we've got to have better weather. And so as that occurs, we should see some expansion start as we go through the rest of this year. A couple of headwinds, though, as we think about labor availability and labor cost, obviously interest rates, all those are a headwind too.
Volatility, will it be like we saw in 23, and what does that bode for our risk management?
Yeah. We should have a year that may be a little less volatility than we saw that second half of last year in particular. We would expect the market to have an upward bias late year versus the first part of the year, just to think about going through tighter supplies over time. Risk management, probably options, and LRPs, just get some protection under you and leaving the top side open.
I appreciate your time as always, Kevin Good, joining us with CattleFax. We'll have more AgDay for